Well, Jeff, I appreciate you being with us today. For our listeners and viewers, this is being recorded. You will be able to download a copy tomorrow in Giving 365. Everyone who signed up will get an email tomorrow when that is ready with instructions on how you can get to this. We're going to spend a few minutes talking about the CARES Act with Jeff. I'm going to ask some of the questions that are being asked of us. Personally, I had 366 inbound emails on Monday. Most of those were related to the CARES Act. And then we're going to have a question and answer time. So there is a button at the bottom of your screen. You can go ahead and submit your question and answers. You participating in our audience can also upvote. If you like the question that somebody else has asked, you can click on the little thumbs up. That will cause that question to rise to the top of our list. So Jeff, tell us about the CARES Act, how this kind of bring us together, how we got here, what the legislation is, what its purpose was, and how this applies to churches.
Wow, that's a wide open question. So I'll start by telling you the CARES Act is unlike any other piece of legislation that I've ever seen. It's unlike anything I've ever seen in two or three significant respects. Number one, the speed with which this legislation was written and then enacted. About 5 weeks ago, I was on the Hill, multiple meetings with various members of the House and the Senate and so on, all on a financial services related matter, Senate Banking Committee, House Financial Services Committee, and so on. And the virus issue was something we talked about, and most everybody was just doing fist bumps or elbow bumps, nobody shaking hands, okay? This bill wasn't even conceived of 5 weeks ago. Now it's been in law for about 10 days. Which means that they wrote this thing in a hurry. And when you make something in a hurry, you know there's going to be loose ends, confusions, and details. So now what's happened is that now the law was passed, and it was passed by the House of Representatives in a very unusual manner. The representatives didn't even come back. It was like a unanimous consensus from across the nation, and the Speaker has that particular power, Nancy Pelosi has that power. And so while the Senate was in session and doing this, the House didn't even have to come back to pass it. It was signed into law by President Trump 10 days ago on a Friday. So the same day the House passed it. So this thing has been on a rocket ship compared to how legislation normally works. After it was passed, banks were told, you got to be ready to take applications in 1 week. Banks were not capable of doing that. In that time frame, the SBA administration, Small Business Administration, and Treasury were going back and forth, with Treasury winning most of the battles as to how it was going to be interpreted and applied. And Joe, we'll get into these details because these are all things that have happened since you and I spoke last week.
Right.
So we'll get into these things. But this bill was put on a rail. The design of this bill is, in the first 80 pages, it outlines the Payroll Protection Program loans, where these are loans that can be forgivable to employers and to self-employed individuals, including churches and nonprofits and 501c3s. And I use all three because there's three different varieties of that horse that the Treasury is finally figuring out exist, and they're struggling with that. So that there can be loans for the purpose of funding payroll costs. Now, the amount of the loan is 2.5 times your average monthly payroll. When they were first drafting the bill, before the House got involved and negotiations occurred, they were looking at doing larger loan amounts, but it got choked down from 4 to 2.5 times, typical political horse trading. The loan can be forgiven if you use it for certain things in the right ratio. And we'll dig into that a little bit later on. But the idea behind the first 80 pages was to provide stimulus money quickly to businesses to keep employees working. in order to pay them to keep working, whether they're working from home or whatever, so as that when we can finally start being in public, being around other people, when that new normal kicks in, these businesses have survived and will be able to pick up where they left off. That was the idea behind this particular section of the CARES Act. Now, there's about 7 more areas of the CARES Act that I'll be covering in later webcasts for other clients and other individuals, but we're going to stick today on the payroll protection program, okay?
All right. So Jeff, one of the big questions that people are asking is the distinction between the economic impact disaster loans and the paycheck protection program loans. One appears to be a $10,000 grant. The other appears to be a loan which may be forgivable. We are getting a lot of questions about whether you can apply for both, and if you do, what is the impact?
Okay, so they're 2 completely different loan programs. The EIDL, the economic disaster ones, I'll just call it that, they can only be for up to $2 million. They're not just a $10,000 grant. They're an actual loan application where you can borrow up to $2 million and you have to repay it back. Your repayment term is over 20 years, sometimes 30 years. The payroll protection program loans can be for up to $10 million for employers with a large payroll, 500 or less. And they have to be paid back according to statute in 10 years, but Treasury's come out and said, nope, they have to be paid back in 2 years. Treasury's also lowered the interest rate on that. We'll get into all that stuff, Joe. So the question a lot of people ask is, can you apply for both of them? And according to the FAQs released by the Treasury late last week, I think I read them about 11:30 last Thursday night, right after they came out. Yes, you can apply for both. If you do receive the $10,000 grant in conjunction with the EIDL loan, it will get rolled into and added on top of your payroll protection program loan, but that $10,000 will need to be paid back. It will not be forgiven.
Okay, so that is a helpful answer we're hearing a lot of. Jeff, one of the things that has been a big frustration for churches that are applying is that they're getting mixed information. Let's just start with the application. Right at the top, it asks if you are a 501c3 nonprofit. There doesn't seem to be a box for a church. One, why is that, and what should churches be doing about it?
Great question. So on last Sunday, I had the chance to spend some time chatting with a friend of mine. I cannot tell you who she is, who she works for ethical anonymity reasons, but I've met with her on many occasions on other financial services matters. So she's very plugged into what's going on because her boss is one of the elected representatives in one of our 2 houses, okay, either the House or the Senate. But she, born again Christian, she and I've got a good friendship. She shared with me that banks under the 7A loans, SBA loan program, have never before been able to lend to churches. So this is all foreign, brand new material for them. So they're not sure how to process it because they've never done it before. The second thing is, and I get this from other sources, bank technology. Every bank has different levels of technology. There's a large national lender that about 4 years ago committed to a huge spending program on upgrading their IT infrastructure. They're one of the first lenders I've heard of that was able to actually to accept and fund PPP loans. They were doing it they were funding stuff by Monday of this week. A lot of other lenders, their software, their IT infrastructure is far more antiquated. Not nearly as antiquated as the federal government's, but it's an issue. And so it requires a lot of extensive programming changes in the background. So what you've seen a lot of banks do, particularly the bank that I deal with, they've just been taking applications, their own application, not even the ever-changing SBA approved application. And Joe, the version you have up on your resource list, by the way, and that's an impressive resource list. That is impressive. That version, I think, is the third version that came out, but I believe it's also the most recent version. But Joe, I'm willing to make a very friendly wager with you that it'll change at least 2 more times in the next 10 days.
Well, I don't doubt that you're correct on that.
Yeah. So what we've got is banks banks are trying to catch up. So if you, dear church leader, dear pastor, dear chairman of the board, if you feel like your bank is stuck in sand and moving slow, in your case, you're right. They all are. They all are. I got an email this morning from my bank saying, we're so overwhelmed, we're not taking even any more of our own designed applications until we process through what we've got. And I'm like, this is Wednesday. You're supposed to take in a whole new batch of applicants on Friday the 10th. How are you going to do this? And they're just so overwhelmed, they don't have the ability to process. So folks, get your stuff together. We covered it extensively the last time Joe and I talked. I'll touch on it briefly. Get your payroll records together. Your 941s, your 944s, your 940s, whatever it is that you've got. Your Schedule Cs if you're self-employed. Get it all together so that when you can apply, you do apply. And even if but always apply with a bank that you already have a banking relationship with. This is not the time to go shopping for a new bank. You've got to be able to, give them that. They're going to be looking for a tax ID number, an employer identification number. So be prepared to have that. Have the other information. If they ask for the name of a representative or the name of an owner, give them a responsible party at your church that writes checks, is responsible, and so on. Those are the best tips I can give, Joe. There's so much that's still developing and turning around in this space that the best that churches can do, in my opinion, is each church, the leadership of each church needs to get together, needs to meet probably virtually, and consult among themselves, asking God based upon their situation what to do. What do they feel led by the Spirit of God to do in this situation, given what they have going on with their resources, their team, their personnel, their bank accounts, their banking relationships, their overall income giving, and so on. And, we can talk about a lot of the things going on, because I know I'm droning on and not taking questions from you yet, but just folks, spend some time on your knees, asking God for guidance here.
Great counsel, Jeff. We talked earlier, and I shared with you prior to feeling a call to full-time ministry, I was CEO of a community bank. I've been on a bank board almost 25 years. Speaking from my banking experience, this is quite a challenge. You've got SBA, who processes somewhere around, I think, 60,000 loans in a year. They have been made the conduit for what will be tens of thousands, hundreds of thousands of loans. They were ill prepared for it. Banks who have been taking these 7A loans have forms and systems that are programmed into what they do, and they don't have spots for nonprofits. You pointed and for churches, you pointed that out, and more than that, the banks are being held accountable by the SBA because they're really the ones that have the liability here. They are underwriting these on behalf of the SBA. If they make mistakes, then they could own this loan instead of it being a guaranteed product of the government. So the banks have a lot they have a lot at stake here. So the counsel that I've been giving persons when they call is you're getting information from a lot of different places. You're reading about it from your own denomination sources. You're reading about it on the Treasury and on the SBA website. You're hearing from other churches about what's happening at their bank. And I have given this counsel: make your banker happy. Ultimately, your banker is going to be the one that's going to underwrite this loan. Yes, it'll be approved by the SBA, but they are relying on the banks to do it. So if you stay focused on what your banker is asking to do, if it's not the same application, that's going to be your best bet. Am I giving good counsel, Jeff?
You're giving very good counsel, very good counsel. And let's dig into this, Joe. Because in the regs that were released and in the FAQs that came out on that Thursday night, we saw what the pressure being put on the banks was. The banks are having to now model their own formulas for how much they believe of the loans that they've originate will be forgiven. They need to then fill out forms that the Treasury is going to send them based upon their models and projections. And then the Treasury will then 15 days later buy those loans from the bank. So the bank has to, 7 weeks after they fund it, package them together, figure out what percentage of what they funded is going to get paid, going to be forgiven. So what was used for payroll, okay? What was used within the percentage guidelines that the SBA just came out with at the same time as to how you have to spend the money in order for it to be forgiven. So the banks are they're in a technological new space. They're in an underwriting new space. They're in a modeling new space. They're under a lot of pressure. And if they get it wrong, they're going to hold this paper on their portfolio, and they're only going to make 1% interest on the loan. That's not a good loan.
So you get a sense of why bankers are struggling with this. We do want to point out that you need to find an SBA approved lender. They have opened the requirements, so banks that want to be able to process this can, but not every bank has chosen to participate. So you may be told by your bank you need to find another bank. I would ask them who they're recommending that be, so that when you call, you can say, my bank has sent me to you.
Now, here's one of the other tricks, and Joe, you understand this with your time on bank boards, like with my time on financial institution boards. The know your customer rule is a big problem here.
Right.
The anti-money laundering regs, because of the know your customer under the Bank Secrecy Act stuff, that's an issue that the banks are really struggling with. And that's why Bank of America first went out and said, hey, you have to be a borrower from us, because we feel like our borrowing know your customer guidelines and compliance was better than our depositor only. Well, they got blown up for that, and they rescinded that about 36 hours later. Then you have banks like Wells Fargo coming out and saying, we can't take any more application because we've already given all the way we can. And that's true, because Wells Fargo is under congressional and federal restrictions as to how they manage their assets. And they can't put more than this amount that they've already committed to lend available for these types of loans, because they're still paying the price for being a bad boy 3, 5, 6, 8 years ago. And I'm not complaining about that either. In fact, my one friend on Capitol Hill that I chatted with on Sunday, when I saw her the last time 5 weeks ago, she was sitting through some of the Wells Fargo hearings, watching the execs from Wells Fargo getting just beaten up by members of Congress and over Wells Fargo's bad acts. So we've got a lot of stuff that we've got to work through. So church leaders, this is a time to be organized. This is a time to be diligent. This is a time to be fantastic stewards of your resources. And this is a time to be in prayer about what God would have you do.
I do want to say, if you are a Wells Fargo client, and you're being told that they are not going to be able to fulfill your loan application, we do have a list on horizons.net of the top 100 most active SBA lenders. So you can go there, and if you're forced, to be able to search this out yourself. So I think we can draw the conclusion the banks are under a lot of stress, the SBA is under a lot of stress, the sand is moving, there's a lot of guidance that is coming out and causing shifting of directions. And Horizons, we filled out an application. We did get an approved loan, but it was 6 different loan packets that we put together over the course of a week before the bank said, yes, we're going to go with this, and submitted it to the SBA. 24 hours later, we did have an approved loan, which is exciting.
That's impressive. That is very impressive, Joe. Congratulations.
Thank you. So the answer is to the bankers, in regard to the bank, do what you can to make your banker happy, because they really are the most important person or entity in this process. So let's start talking about some of the applications to churches. There were questions about church and state. The SBA came out with an update specifically addressing nonprofits and in churches. We've got that update. They dropped it last Saturday, FAQs. I'd encourage you to read it. Jeff, any implications of separation of church and state, or things that the church may be agreeing to in this loan program that are going to have a long-term impact for them, in your estimation?
Based on everything I have read, I do not see anything that causes me concern. If I, as a church organization, am comfortable borrowing money from a bank, this looks to be the exact same thing under the worst case scenario. The fact that it's got to be paid back in 2 years, the fact that it's going to accrue interest at 1%, and I'm referring to those portions of the funds that you are lent that you do not use for the forgivable purposes, which, by the way, 75% of your loan proceeds or more must be used for payroll. Must be used for payroll. You have to prove that 75% of your loan proceeds were used for payroll in order to qualify for forgiveness. The remaining 25% can be used for rent, utilities, debt service, paying just the interest portion on other debt that you may have. I would really urge churches that if they take this money, 90% or more of it needs to go to payroll. That will make it the easiest for the bank. And if you can assure that to the banker in any way, do that. Show the bank what you're planning on spending the money at. Here are the people that we're having. We're not laying off anybody else. We're not hiring anybody new. We're not cutting salaries. And if by the way, if you do cut salaries more than 25%, that does impact forgivability. So you've got to do all those things. If you can make it easier, then it's easier for them to model what you're doing. Better understanding, it makes it more likely that they'll take that deal, because they're going to get all their money back from the SBA then in 9 weeks after they fund your loan. And that really lifts the burden off of the church, lifts the burden off of your bank, and accomplishes the true purpose of this whole program.
So Jeff, we've given counsel to churches just to make this easy to audit, to open a separate checking account that is just for these funds, and these funds would be then, you would only pay from that approved uses for these funds. I'm struggling around for some words, but essentially a separate checking account. That way it's easy to audit. I remember your words. This is going to be a lot easier to receive than it will to get forgiven. Expect audit type reviews of this. And so by setting these funds out, making sure that you can point to just the transactions, you've not commingled them, forgivable debt with non-forgivable transactions. Is that still a piece of advice you recommend?
Highly recommend that still to this day, Joe. That is a very good way. In the ideal world for churches that use a third-party payroll company, that use a third-party resource, like my church, we use an accounting firm to handle this stuff. We would literally put them, if hypothetically speaking, if my church borrowed this money, we would have the money into a segregated account and only dispense it as we can prove it's going to payroll. As it's going, so that penny to the penny, it's showing it's going to payroll. That's how that, if I was asked, and I sit on that committee, if I was asked, that's what I do. Right now, I don't think my church has got to do this, so we're not looking at it. That's where we are. That's what I do. I would make sure that I have a very clear paper trail, and this means, and this is somewhat challenging. This means that the administrative team at your church has to be fully accountable and fully engaged on this.
Thank you, Jeff. Let's turn now to some of the questions that we're receiving from the group. Frank asks this question: How are school teachers handled as they typically stop work during May, June for 8 weeks of during the PPP? I think the question is, how is this going to apply to churches that have schools when their school teachers are going to be taken off in a typical sense in the summer? How is that going to be calculated in regard to the forgiveness?
Okay, I'm going to answer that question from two angles because I agree with your interpretation. I want to give it one other thing. A lot of times school teachers are paid on a 12-month period of time just to make it easier for them for budgeting purposes. So their 9 months of work is paid out over 12 months. If that's what you're doing, you're going to be fine. That's going to help you on calculating not only your average payroll cost for a month-by-month basis and averaging it out, but it's also going to help you in paying. Now, if you get funded soon enough in the month of April, you have 8 weeks from when you're funded to spend the money on payroll in order to get it forgiven. So if you get it funded soon enough in April, then you're going to have second half of April, all of May, beginning of June. How your school is going to operate, are you going to come back in session and extend it into the summer to try and make up? I don't know. That's a big issue. I don't think a lot of high-level school administration officials have an answer yet, but that's the way I would look at it. If you're paying your people every 12 months, you're great. If you're paying them only when they're actually teaching, you're going to need to pay them. You could actually pay them a little extra. There's actually a little loophole in the bill some people are complaining about. You can actually bump it up and pay them for what missed or whatever. So there's a couple of ways to handle that.
So Alan's asking the question about clergy compensation. How is that calculated? Let me just go ahead and throw in the question of housing allowance. That's been a popular question. Should we calculate it? Should we not? How are we going to have this conversation with the bank when they're asking for payroll forms that the 941s that don't include the housing allowance in there? How do we get that added back in? Jeff?
I believe you can include housing allowance as other compensation that was paid. You'll have to be able to prove it through financial documentation. If money changed hands, is there a check? Is there a bank statement to prove that that money actually, the check was written and it cleared the bank for the housing allowance? If it's, because it's not included in any other way, and that's the way the code has been since 1986, I believe. In the mid 80s, we had this big issue, and Bob Dole managed to tweak it in a certain way to where pastors who were then going to be treated as neither fish nor fowl had this unique exception over Social Security taxes and housing allowances. But when you read the statute, when you read the CARES Act, particularly on page 13, you'll see the definition of payroll costs. I think housing allowance clearly falls under other compensation paid. So include it. explain what it is. I realize there may not be a line on the form, put it in somewhere else and be able to back it up with documentation.
So what we're hearing from churches is they have used the calculators that their bank may have provided. If there isn't a place for it, they have included it by handwriting that in. If their bankers let that go through, that's great. If they don't, it probably is a qualified expense based on what you're saying. You may have trouble getting it into the calculation for the loan. Jeff is suggesting that it is a qualified expense when you pay that out. This is again one of those frustrating places that comes down to what your banker going to allow you to do. But many banks have allowed, at least we have been told, have allowed housing allowance up to the 100,000 limit on your highly comp to be included in the loan calculation.
And those banks that are doing it that way, they're doing it right according to how the CARES Act was written, pages 12 through 14 or 15. Yeah, they're doing it right. The last thing I'll make a comment on this is you have to remember that for years, small business lenders across America, the SBA approved lenders across America, were used to all having their piece of a $30 billion pie, 30 billion. This CARES Act put another $349 billion into that 7A program. We went and more than 11x. That's a huge change. So expect a lot of confusion, expect a lot of people needing runway and having questions and so on. I'm hoping to have additional information by the end of, by next Sunday from my resources on the Hill as to what's really happening behind the scenes with SBA and Treasury as it relates to churches. Because I know that that's been an issue that's been ongoing. They have, and I don't know if I shared this or not, Joe, but they have come out and clearly said that if a church is not a 501c3, they can still apply because they are a nonprofit and they should still go ahead and apply.
Thank you, Jeff. Davis Turner asked us this question. Do lease expenses for things like copiers constitute rent that qualifies for forgiveness if they're spent on these lease expenses? Or is it rent only real property leases?
The way the statute is written is a little vague, but I would clearly err on the side of caution and apply it to rent on a physical structure. So if your church is paying rent to a community organization to use a community sanctioned building and so on, that's what I would use. I would not use it on, I would not try and say this is office equipment and try and write it out there. You're much better off taking that money that you've borrowed under PPPP when you get it and using it towards payroll, using it towards utilities. Okay, you can use it towards utilities. If you can show that this is the same average electric or gas or heating or air conditioning bill that you've normally been dealing with all along, use it for that.
So the payroll or paycheck protection program loan requires that 75% be used on payroll expenses, 25% are discretionary. You have suggested churches try to have that somewhere closer to 90%. Can you expand on why you think it would in the church's best best advantage to do that?
And Joe, thank you for asking that question because, you know, I have run my businesses according to principles that I find in the book of Proverbs and are taught through Entree Leadership and by a really dynamic company in Nashville, Tennessee. So I don't do this, okay? But I will thread this needle when it becomes the equivalent of a grant. And so I'm counseling churches to err on the side of caution to maximize the forgivability of this loan. And so that's, while the threshold is at 75%, I believe if you can be higher than that, it's going to make it much easier to prove your forgivability qualifications. It's going to be kinder to your bank. Your bank is going to have an easier time modeling it, projecting it, presenting it to the SBA, and getting their money from the Treasury 9 weeks after they fund you.
Well, staying on that subject of forgivability, Michael Bachman asked this question. All the language surrounding the PPP says that loans may be forgiven if we follow certain stipulations. Should we be concerned that the language doesn't, the legislation doesn't say will be forgiven?
The way I read the statute, the forgivability portion is probably at about page 60 in the 880 pages I looked at, and I'm ballparking that number, 60. It's pretty clear that the congressional legislative intent signed into law by President Trump is that if this money is used according to these purposes, it will be forgiven. So the authors that he's reading are using vaguer language because we can't say for sure how somebody's going to use this money. But if we do use this money the way the statute is written and the way the SBA is now interpreting it, then it is clearly going to be forgiven. Now, once again, you got to remember, they could change the rule, but they can't change the rule after you receive the loan. So what was the rules at the time you applied? That's what you're going to have to pay attention to. That's why I'm going back and saying, use it on payroll, use it on payroll, use as much 90% if you can on payroll. Keep your people taken care of, because folks, you can negotiate with your landlord. You can negotiate with your bank on 1 or 2 months of deferrals, whatever, but keep your people fed. Keep your people and their babies secure, because they need to have the confidence that they're okay so that they can continue to minister to others. This is a time where we've got to say, hey, listen, the shiny stuff has to go away. People matter. Let's take care of people. And if churches can take care of their staff, then their staff can go take care of the people at the church and the people outside the church.
Beverly is asking the question, you indicated to open another account to keep the loan funds in. What about keeping it in a temporary restricted account already on the church's books?
If you've got tremendous payroll and accounting software, fantastic. If you're one of these people, and I've got a couple on my team and I work with several of them, that they have everything down to the penny every day. If that's your skill set, fine. But be able to prove how you got this money and where it went. That is a fundamental requirement in order to have this forgiven. Because, Joe, as I've shared with you before, the forgivability is the reason I dug into and really understood this stuff. Because otherwise, I'd be like, nope, not interested. Moving on.
Thank you. So Cedric is asking a question we talked about a little bit before. He's asking it specifically as it relates to churches. Can churches apply for both the PPP loan and the economic impact disaster loan for a grant for $10,000?
I'm going to answer this with a degree of confidence at about 60%, and the answer is no. Because the economic or the EIDL loans don't have any particular provisions saying that they are available to churches, to nonprofits, to 501c3s, while PPP loans have specific statutory language saying they're available to churches, nonprofits, and 501c3s.
I like your answer, a 60% degree of confidence. And that may change up or down over the course of the day based on guidance that's put out. It's just that slippery right now.
And Joe, it is so slippery that I threw away my slide deck on Friday because it was so wrong. I mean, I've been doing a number of these webcasts and so on, and I just threw it away. I go like, there's so much wrong in this thing. I know it cold. I'm going to do it all from memory now because everything keeps changing. It's just, I threw it away. It was so out of date after 10 days.
All right, back to the questions. Carol asked, will there be enough money? I heard it will run out soon. Could you take that one step further and say, if we do hear this has run out, what are you recommending churches do, even if that news gets announced?
You and I talked about this before we went live, and I think you're exactly right, Joe. I think the money will probably run out. I think that there will be another round of funding. I think you're going to see a tremendous political battle over what's in that next round of funding. There are forces in our country that are going to try and use this to achieve things that are just anathema to the church, but we've got to be prepared for that. If funding does run out, when funding does come back online, they will apply that to people who had already applied beforehand, not after. So if you believe that God is leading you and your church organization to do this, apply, even if you're afraid it's going to run out, because I'd rather you be that further ahead in the queue than waiting to get into the queue when the second round of funding becomes available, if that happens. The last thing I want to make another comment on, and I don't know how much this will impact for your listeners, but individual churches that are all members of a large denomination are all recognized as separate borrowers by the Treasury and the SBA. So the denominational mothership is not the exclusive borrower. So each individual church can borrow. That's another thing that came out Saturday evening, backroom deal.
Rebecca asked this question. Can you talk about full-time equivalent calculation and the number of jobs on the application? We assumed 30 hours is full-time and added all of our part-time and divided by 30. It's getting kind of technical. Can you just speak to the calculation of full-time employees and the number of employees, because it asks for that on the application?
Yes, this is tricky. They're going to take two snapshots. They're going to take a snapshot as to what was your employment either on February 15th of 2020 or when you applied, and they're going to snapshot that with what was your employment when the 8 weeks or June 30th comes out. The 8 weeks is how long you have to spend the money on payroll to qualify for the forgiveness, spend the money on payroll, rent, mortgage, interest, and so on. You want to have, if at all possible, the same number of employees. Do they have to be the same people? No, but you want to have the same number as much as possible so that it's easier for your bank to understand what you did and agree that that loan is forgivable, that those proceeds, those funds are forgivable, because you've got to make it easy for the bank to understand what you've got so that they can better model it when they're completing the form. I can't remember the regulation number that they have to submit at 7 weeks in to the SBA to then have the Treasury buy that portion of these loans 2 weeks later, 15 days later. So track your employment numbers. I would tell you, be conservative on the number of full-time employees when you put down the application, so that if that number grows, you look great. If that number stays the same, you're good. And if that number shrinks, you don't get hurt so badly.
Thank you. Mark is asking a question. Are we able to offer one-time bonuses to employees to increase our payroll costs during the 8-week period so they become forgivable?
Yes and no. Yes, as long as that does not push their monthly salary total aggregate in excess of $8,333.33. No, if it for any portion that goes over $8,333.33 paid to one particular employee in that month.
Let me just speak to our listeners for a second. We now have 35 questions in the queue. We'll never get to all of those. Look at the queue and upvote the questions that are most important to you. So we've got a question here about 1099 employees. Are 1099 employees covered under the PPP program for churches?
Yes, this has been the biggest battleground of debate and confusion, the 1099 employee. The consensus was finally reached Saturday night between SBA and Treasury that in order to prevent double dipping, and despite what the language in the legislation says, employers that pay both employees by W-2 and document other people on 1099, employers can only use their W-2 information. All of the 1099 recipients have the opportunity to file for their own PPP loan later this month. So I know how the statute was written, and several lawyers and I agreed on how it was written, but the Treasury and the SBA came back and said, whoops, we don't like it. We're changing it. And they've got the authority to do it. And so that's how they've done it. So 1099 people can apply on their own. Now, here's the key. If you're a 1099 individual, pay close attention to what is on line 31 of your Schedule C on your personal income tax return. That's the number I believe that they will focus on. They're going to look closely at your 2019 Schedule C, line 31, and they're going to look to say, oh, what have you done for the first quarter of 2020? What did you submit, if any payroll remittance taxes did you do for the first quarter? So if you haven't done that yet, if you haven't filed your 2019 return, talk with your tax preparer about what you might want to do there. If you're still in a window of opportunity to estimate or pay payroll taxes for the first quarter of 2020, if you're self-employed, those are the numbers that are going to get used in calculating what is your monthly payroll cost to be multiplied times 2.5 for your own PPP loan if you're going to move in that direction.
So
That's
Derek,
that's a part where if you're listening to this, I suggest you back it up and listen to it a couple more times because I got really technical, really deep.
well, building on that, Derek is asking things that are covered in that pension cost. He's asking, or payroll costs. He's asking about pension costs, health insurance costs, other benefits such as accidental insurance, life insurance. Are all of those included in pension costs?
Not all of them. Some of them are included in payroll cost. What the employer pays towards the employee's 401k, what the employer pays towards their 403b, what they pay towards their SEP or their simple is, what they pay towards their health care costs, the health insurance costs, are all included in payroll cost. What they pay in state and local taxes is included in payroll cost. But what they pay for AFLAC, life insurance is not included. The statute did not include that information in their definition of payroll cost.
This is more of a statement. A church was asked about their NAICS code, and they're offering the code is 8131110 if you're asked for that. One church's credit union asked them for that. Can internet connectivity be included as a utility expense?
I believe yes, if you can show that it was something that you were paying all of 2019 or for most of 2019. I believe yes, you can. Just like electricity, just like gas, just like heating oil, anything else that's there. Yes.
So Gretchen is
gas, not gas for the cars, but natural gas to heat the buildings.
So Gretchen is asking, how do we know if our loan is forgiven? Well, what's going to be that process? How will we apply for it? How will we get notified of it? What's going to happen? I know this is a tough one.
That is the first question that I've been asked that I'm going to say, Gretchen, I don't know what that looks like yet. I can tell you that they're spending more time right now focusing on getting the money out, and they're going to worry about that one 5 weeks from now. Okay, great question. Circle back in a month, we may have some clarity, but right now there's very little information in that particular category.
Michelle says this: we have some teachers at home and some still working to care for essential workers' children at our church. We simply don't have enough work for all of our teachers today. Do we pay those staying at home in order to prove we've retained the employees?
Can I volley a question back? Does this particular organization that's doing that, do they file an income tax return for that organization or entity?
Jeff, I don't know that I'm going to be able to pull Michelle's answer out.
Okay.
So why don't you just share with us what you're thinking?
Well,
because I think this is a big question. Churches have got these day schools.
Yeah.
They've closed them.
Yeah.
They're paying them right now if they're able. What should they be doing when they're not delivering the service that's associated with the employee?
That church in that situation needs to dig deeply into another portion of the CARES Act and see if the tax credit provision for paying an employee 2 weeks of sick leave because of COVID-19, that would be a way that they can stay home, still be paid, but not be working, and result in the potential of a very nice tax credit for that organization if it's filing a return subject, with some tax consequences for the revenue that it makes. That's a very nice option. If the church isn't able to do that, then the best answer I can give is that's going to be a church by church, board by board decision. You could take those individuals that are at home and not working, and you could reduce their compensation by 20 to 25%. I would say under 25%, and you could still be compliant with the CARES Act payroll protection provisions. That's another option that they have.
So this is an interesting question, unique to churches. Can a pastor's reimbursable expenses be included in payroll?
Making me think here, man. I'm closing my eyes and I'm picturing the language on the page, and I'm going to do it this way. I wouldn't include it, okay? Because I don't see it under the definition of other compensation. I see it is classified as something else. If it was something that was subject to taxation, yes. Okay, housing allowance is that unique flyer. That isn't, but reimbursable expenses, I would say probably not.
Jim asked an interesting question. How do you interpret the certification statement that says current economic uncertainty makes this loan request necessary to support the ongoing operation of the applicant?
Okay, great question. That's an interesting, and I'm going to tell you why that's a great question, because earlier this week I was speaking with a dear friend of mine, one of my closest friends. He's chairman of the board at a large church north of Detroit, Michigan, and he shared that financially last Sunday had better giving due to all online than what they normally have. If that's the situation in your church, present circumstances are such that you may not need this loan. But if you can show that your giving is way down because of social distancing as a result of COVID-19 protocols, then you can go ahead and self-certify that. It depends on the situation that you've got. You've got to look at what's happening with your organization. Do you have people who can't come into work anymore? Do you now have a drop-off in giving as a result of that? Do you now have a drop-off in giving as a result of people not being able to physically attend? okay, you can self-certify. But in this particular instance, for this church in Rochester Hills, Michigan, they couldn't self-certify because they're looking at their numbers and going, hey, it's costing us less to run the facilities. We've got them all pretty much locked down. And and this dear friend of mine, we spent a long time talking. He shared with me all the things that they're doing on a board level to protect and preserve the resources of the church. Fantastic information. But their revenue is up and their expenses are down. They can't self-certify in this situation.
So there are a number of churches that we work with and coach that are doing just terrific. They've got high levels of recurring giving. They've mobilized for ministry. They're really experiencing high watermarks in terms of attendance, that sort of thing. If a church is uncertain and they apply for this, they find that from an economic point of view that their revenues versus their expenses have left them in a better place than they were beforehand, but they have the loan, what are they going to do with that?
Well, let's phrase it this way. If things turned around after they applied for the loan, because they got to self-certify at the time that they apply. So if things turned around after they self-certified and applied for the loan and received the proceeds, then guess what? Use the money for payroll. Use the money for payroll and let the other money that's coming in now all of a sudden due to increased online giving, let that sit somewhere else. But show that these loan proceeds got used for payroll.
This is going to be our last question, Jeff. We want to honor your time. You've been terrific with us. We've got 38 questions that we've not yet gotten to. This is a question I do hear quite a bit. If we're getting 10 weeks of payroll funding for the loan, but we only have 8 weeks to spend it, what do we do? Do we pay 10 weeks? Is it other expenses? What do we do?
Here's where we go with this. Yes, you're getting about 10 weeks at 2.5 times payroll cost. You've got 8 weeks to spend it, but you've got 8 weeks to spend it on both payroll and other things like rent, utilities, interest on if your church built a building and still has a bank loan on it, the interest on that payment, the interest portion can still be used. You can pay the interest portion with these loan proceeds, and that can be going towards your forgiveness. So you got to show where you are in the amortization of that building and how much was the interest payment for April or May or June of 2020, and drop that in part of your package for seeking forgiveness. You can do this with utilities and so on. So I think it's very possible to expend that money in 8 weeks, even though you might be getting 10 weeks of payroll money. Because if you go over 75% towards payroll, if you're going to hit 80%, there's 8 weeks. The remaining 20% will go towards the other things, and you'll qualify for forgivability on all of it. And that keeps me happy because I'm a huge fan of not owing banks money. I'm a huge fan of that. And so this is why I really studied this particular provision relative to always with the focus on how do I get it forgiven? How do I get it forgiven?
Jeff, last question for the 38 folks that didn't get their question answered today. Where should they turn for advice?
Oh, well, first off, that was an impressive list of resources on your website. That was probably the best list I've seen in all of the webcasts I've done. The second thing I would say is pay attention to what their bank is telling them. The third thing I would say is look to see what their member of Congress is putting out on their member of Congress's webpage, website, Facebook page, etc. The places to not get information, social media. Another place to not get information is communication, anecdotal information from other pastors. I don't want to use the word gossip, but don't use that. Everything is different. Every bank is doing this differently. Every church is different. Those are the places I'd go and get my resources. I'd be back on the Horizon website. I'd be to see what my member of Congress has to say. I would be doing what the SBA has to say. Of course, you got links to that. And then lastly, the bank and the member of Congress. What is your bank saying? you've got to stay in touch with your bank.
Thank you, Jeff. For our listeners today, I do want to remind you of the resources that we do have available for you. I need to say that Horizons, we are not licensed to give accounting, legal, or tax advice. So if you're thinking about sending Horizons some of those questions that would fall into that area, I apologize, but we're not going to be able to answer those questions for you. I'd also encourage you to visit with your CPA. In my setting, the bank required our CPA to look at our calculations, certify those. I imagine that we will be asking our CPA to certify our expenses to make sure that we have expended funds in the proper way, and we have found ourselves in the best possible case to have a forgivable loan under the small business portion.
Excellent advice. Excellent advice.
Thank everyone for attending today. Again, you'll get an email tomorrow that tells you how to download a copy of this webinar. If you want to view this later, I'm sure we'll be posting it in our Resilient Leadership series that goes out next Tuesday. And the links that I displayed earlier are available on horizons.net. Thank you very much for coming. Jeff, thank you so much for serving as a resource for churches. You're not compensated for this. You're doing it because you love God, you love the church, and thank you so much.
My pleasure, and Horizons has been a great resource in the past, and I'm sure you guys will be a huge resource going forward. So thank you for the opportunity.